Hey guys, this is Scott Horne, and in this video, we're going to take a minute and talk a little bit about buying properties subject to the existing debt in a down marketplace. Talk a little bit about why sellers actually would sell their biggest asset they own this way. Now, what's going on in their mind? Again, as we go through this, hopefully you guys like the video. If you do, take a minute and like it, please. We would appreciate it. Don't forget to jump over and join our YouTube channel. And any comments below, we'll do our very best to answer for you. So buying homes subject to. Why do sellers do that? And guys, for those of you who are new to the business, there's a bazillion reasons. Mom and dad passed away. There's an existing mortgage on the property. They need to do something with it. It's in bad disrepair. It's in a down market. They can't sell. It's been sitting for a long time. And by talking about houses sitting for a long time, so many investors, 98% of you are new to this industry when we've been on this upward cycle for so long and not used to a downward cycle that we're in right now where things are not selling and flying off the shelf in a day or two. We're getting back to normal marketing, which is usually anywhere from 3 to 6 months to sell a home. Some sellers get transferred. They have to move. And I can give you all an example of that here. Medical issues, I could go divorce, you name it. They just want out. The reasons just are never ending, as you will find as you get more and more vested into that industry. As we approach these deals, every marketplace we go through with subject to and whatnot is different. I go back to after the 2008, 2009 real estate crash, and we were buying homes subject to the existing debt back then that were in great condition. They were current on the mortgage. People just needed out. We were able to take those and using our back-end owner finance structuring, get a down payment, and that entire down payment could go in our pocket. We were generating positive cash flow, and we were generating equity. Now, from that time to today, everything else in the world has happened, and it's been a bit of a roller coaster where you buy equity, buy no equity, you buy cash flow. Things of this nature are occurring along the way, and every marketplace is a little bit different, and the location of your home can be different. We investors ask ourselves all the time, you got to be kidding me. They're going to let me come in and take over their payments. They're going to deed me their house, and the simple answer is yes. Giving a real life answer with some reasonably sophisticated people who had bought a home here in Dallas about a year and a half ago. They had got transferred to Alabama, and they had 60 days to move to get there. They had to go. Well, the problem is they had just bought a brand new home. They'd only been in it for a year, and now they had to sell. Well, guys, if you understand the real estate business, when you buy a house, put a down payment down that's minimal, usually 3.5% to 5%, and now you got to sell. By the time you pay commissions, closing costs, fees, it takes a while in order just to break even. But now, if your marketplace has dipped down from when you bought it at the height of the market, you're losing money. And if you're in a subdivision where they're still building houses, you are really going to be a hurting puppy. That was the situation in this scenario. As we got approached by the realtor, because they said, we can put them on the market, but they're going to lose $30,000 or more, and they ain't got it. Can you help? And of course, my answer was, I have no idea, because I knew all of these situations about this property and where it was located. And I knew that it was going to be a challenge to find a buyer. Why would a home buyer who wanted to go to a subdivision buy a house that's 1 year old when they can buy a house that's brand new? Now, the only reason for that would be maybe because you're offering terms. But it's difficult because you're competing against a builder, and builders have a lot of tools that we investors don't have. So in this particular situation, instead of taking the deal down and buying it up front, I put it under an option contract, knowing that it was going to take time to market. And sure enough, I guess I was right. We had extremely limited traffic on this property. And we're marketing across all of our social media outlets, to all of our marketing reps, to other realtors in the area, etc. And we're getting almost no traction. It took us, in this case, 4 months to find a buyer for owner financing. I didn't get my 10% down payment that I wanted. I got about a 6% down payment. I had to make concessions. I didn't get my $1,000 a month cash flow. I got about a $450 a month cash flow. But at the end of the day, was it a good deal? Yeah. This house was in mint condition and needed nothing. We put a good person in there who did put down a good chunk of change to move into the home. We processed this buyer. They were easily qualified for it. And they bought it because they got a great rate. I couldn't charge my normal 9.25 rate. I think I had to drop it to like 7, which at that time was below market even. But I was still able to make good money because the existing mortgage on the property is 3.5%. So you learn to manipulate things and understand things like that. But that's just an example of how these people had to sell their home. They needed out and they didn't have an option. And by helping them do this, we created that option for them, and they were extremely thankful for it along the way. Now they're protected. They know that if payments don't get made or whatnot, they can come back in and take the house back. And that was to ever happen, you hope the marketplace, of course, has changed and has gone up and down. Now, along the way, in the sub-2 world, all types of things happen that may affect how we look at deals. Now, most of the homes we're seeing seem to have limited equity in them. And that's okay, because subject to does not always mean buying equity, but you're buying cash flow. And guys, in the investment industry, cash flow is king. You can't spend equity, but you sure can spend cash flow. And so learning how to look at these deals through a different lens is so important. But one thing that I'm seeing is normally the houses we're looking at, the seller is behind in payments for various reasons. Secondly, I'm seeing a lot of pretty good houses that don't need a lot of work, just a little bit of work done to them, but there is some out-of-pocket items that are needed. Maybe it's just paint, maybe it's just some flooring, a little bit of yard cleanup, but no massive renovation, these kind of things. And then there might be a realtor fee or a wholesale fee or whatever it might be. And you're going, all of a sudden you're $40,000 out of pocket to get into this particular property. Now you're going, okay, you put $40,000 into it, and can you rent the property? Answer is maybe. But right now, at least in our Texas marketplace, it doesn't work because the rental payment is going to be probably equal to or less than the monthly payment. So if you're looking to make no return on your $40,000 and break even or lose a little bit, great, go for it. But what does work? What does work on those kind of scenarios is the back end owner finance game. And so we're able to sell those homes, get a reasonable down payment from a back end buyer. That down payment can be between 8 and 10% typically right now is what we're seeing. And that down payment, even if paying closing costs, helps reduce that upfront fee. So now instead of being out of pocket 40 grand, let's say, and in this case, I'm gonna think about a home we just did recently that was a $400,000 home, and our mortgage on the home that we took over was about, gosh, I think it was like in the 360 range in this case. And we were able to pick up a $40,000 down payment, meaning what my buyer owes me and what we owe the mortgage company is almost the same, zero equity. And most investors walk away from that. They don't like it. We look at that and go, okay, we get this down payment from our buyer. We're still out of pocket $20,000, meaning technically I'm upside down 20 grand. What's my cash flow? My cash flow in this case is $1,200 a month between the buyer's paying me and what we're paying the mortgage company. What that simply means is in 18 months, I get all my money back. Is it worth the risk? I think so. Is the buyer going to walk away from $40,000? I don't think so. At least not in the first year or two. It just doesn't happen. If it did, we'd go back, resell the house again, and be even in a better position. But after that 18 months or so goes by, for the next 28 years, basically, we're making $1,200 a month cash flow. And guys, if I could do that one time a month, every month, home run. Let's go for the left field bleachers and put it over the fence. It's thinking through deals properly to realize what can be done out there. Sellers are so often looking for exit strategies for all the reasons I enumerated at the beginning. Sometimes we get lucky and we can create equity in a sub-2 deal when there might not be any equity. Let me give you another example of what I'm talking about. And I use this example quite a bit because it's so logical where we have about $123,000 first lien mortgage at a 3.25 or so interest rate. And there was a loan modification, second lien on the property for 36 grand. Seller's 15,000 behind in payment, and this home needs 25,000 renovation. It's in bad shape. Walls, flooring, oven doors torn off, cabinet doors off, this, that, you name it. It needed a lot of work done to it to get cleaned up. And only had a value of 210 grand, and all the stuff added up puts you in at 200,000 bucks. And guys, a cash in buyer, if you're a cash buyer on that home, you might have offered to pay $135,000 for it if you're a real cash buyer. Obviously, she couldn't take that because her payoff was $175,000. She didn't have the 40 grand to come to the table. In this instance, we're 3 weeks out from foreclosure. Can she sell at retail? It won't pass retail standards. It won't pass an appraisal standard. She's out of options. We were the only option. And so by knowing how to properly present that to them, we were able to acquire this house. And you go, but you bought a home again that had no equity, and you had to put out 40 grand just to bring the loan current and for renovations, and you still needed interest carry along the way. But again, we play the seller finance game because the rental game may not work in a lot of these scenarios like this on particular houses like this one. But we were able to sell this home in a matter of 6 to 8 weeks, picked up a very attractive down payment, again, picked up an $1,100 positive cash flow on it. The reason our cash flow is so high is this $36,000 loan modification, this HUD partial claim deed of trust, had 0 interest, 0 payments. It's still a valid debt on the property, but no payments. And so we were able to take that entire cash flow and apply it to the money that we were out of pocket and got reimbursed all that money in about 24 months. So once again, guys, just like in the first option I gave you guys, we made no money. And the problem with today's world is everybody wants that instant gratification again, which you can't always get. But what did we get at the end of the day in this scenario? By the time it was all done and I paid off my private loan on the property, after 2 years, I owe the bank about $155,000. My borrower owed me about $215,000. So I had created a very large amount of equity out of nothing in this transaction, plus $1,100 of monthly cash flow. And guys, 4 years later, guess what happened? They went out, refinanced the property. So not only do we make 2 years of $1,100 a month or $24,000, $25,000 in cash flow, we made about $65,000 plus in equity from a deal that had 0 equity going into it. So it's so important to learn how to analyze these deals, learn how to structure these deals, how to look at them through a different lens. And you can't be myopic when you look at these deals. You've got to look through them. Sometimes it may look like you're upside down, and you may be, but you got to think about what's really going to happen in this transaction. Will this buyer sell the house tomorrow? Probably not. If they were, they'd probably give you a call and work with you in some format to help them out of the transaction. So you're going to be able to control the transaction along the way. There are all types of sellers in all types of situations. Learn how to analyze these transactions more properly. Look at various options. Can I Airbnb this property? Very possible. And does it generate the cash flow you need to carry your debt, maybe to reimburse your private capital or your own cash that you're out of pocket? That could certainly be an option that allows you to hang on to this property long term. In a lot of marketplaces, rental rates and property values are very different than they are here in Texas. That allows you to rent the home on a very positive basis along the way. And in some markets, you may need to do a seller finance on it on the back end to help recoup some of these dollars and to generate that positive cash flow. Of course, again, the biggest issue, that 800-pound gorilla that is out there, is you don't get money today in so many cases. It's money tomorrow. And so many investors simply aren't willing to wait for that. They want it now, and they miss the boat, and they miss this great opportunity for all this equity that is out there. Maybe we just got lucky, learn how to analyze these deals and how to look at them this way. But if you as the investor can take the time, learn to think through your deals a little bit differently, you can find that playing the sub-2 game in any kind of a marketplace is so viable. So guys, I hope you found that this video was helpful, helps you think through your deal a little bit. It helps you go out there and acquire more transactions as well. Take a minute and like the video if we did a good job here today for y'all. Don't forget to subscribe to our YouTube channel. Make any comments below. We'll do our best to get back to you on those as well. And like usual, we'll see you guys next time.